Yo, guys. Good morning, guys. Good morning, guys. There is something I want to show you before we move to technical analysis today. I want to tell you about indices. You understand? Indices. You know, let's assume you want to go for analyzing like GBP, USD. Okay. All right. So let's assume you want to trade USDPS, like I need some kind of correlation. You can just go to DXY and see what DXY is doing. What does DXY mean? DXY actually means dollar index, and it determines the strength of dollars. If you understand, this is DXY. You can just come to your search box here and type DXY. It is going to lead you direct to DXY. So it is going to let you to know the strength and what DXY is actually doing. So let's assume now that okay, DXY is giving you a signal of what? A signal to sell. Sure, you understand. So if DXY is telling you sell, that means you should be looking for a buy opportunity on what? A buy opportunity on GBP USD, Euro USD, and other USD pairs. You understand? Other USD pairs in which USD is serving as a quote currency. Sure, you understand what I'm saying? So DXY now, you need to analyze DXY and see what DXY is doing. So if you want to do it, so let's make analysis on DXY. Let's start from the monthly time frame and see what DXY is actually doing on a monthly perspective. So when you look at DXY on a monthly perspective, you can see that we um we went bullish sometimes since we were able to break the swing guide. We were able to break the swing guide. This is not how I wanted to draw it actually. Like this swing guide. So which means that DXY is actually bullish, right? Then we came here to form what? An I low, I. But market broke what? Market broke this our I low and then came down to form a low. Then market went up again. Then now market is down. So if market should break this place now, we can say um DXY is what is bearish on a long term, but so far the market has not been able to break it. We are still on a consolidating market. You understand? We are still on a consolidating market. This is something that you regard as what? You regard as a fake out. Okay? Market came back to your resistance. Now market is heading towards the support. So we expect DXY to be bullish very soon. So now you go to your weekly time frame and see what is actually happening on the weekly time frame. So when you look at the weekly perspective, you can see that DXY has actually been bullish for some time. Then now it's now what? It's now bearish. Can you see the series of series of lower highs and lower lows? Can you see it is now heading down? So far, it is yet to break what? To break this previous lower low. So if you could break this previous lower low, you could assume that okay, DXY is actually coming to this place because this is next resistance, or next support, or this place. You understand? If provided that DXY should break our what? Should break our previous what? Our previous what's it called? Previous lower low. If we should break it like this is the previous lower low. So if we should break it and wait for a retest, then we expect DXY to come to this support here, or the support here rather, this place now. Okay, so if we come to this, because this is the nearest what? This is the nearest support, or this level. You understand? So that is what we're actually expecting on DXY. If DXY could not buy from this spot now, that it is upward. You understand? If it should break that spot, so we expect it to be what? To be bearish. So let's see the daily perspective. So that is how to garnish. That is how to garnish your. That is how to garnish up your. So that is how to actually garnish up your. That is how to garnish up your trade. Provided you know you know what DXY is actually doing, you understand. So this is the, can you see the support? So on this daily time frame, it is actually on support, on a support level. So if it doesn't buy from the support level now, if we don't see those candlesticks, that gives us indication that something is actually going to be what, going to be bullish, then that means DXY is what, is coming down, then retest this, then coming down. You understand what I'm talking about? So so if DXY is telling you sell like that, that means you should be looking forward to see something like buy on pairs like GBP USD, GBP USD, Euro USD. You understand? So um so this is the 4 hour time frame. So that is it. That is it on 4 hour. It is actually on a resistance, that's why on a support as well on what, on 4 hour time frame. So let's see 3 hours. So 3 hours is actually on a support as well. So we expect to see something bullish, but if we do not see something bullish, that means we should be expecting stuff like sell on pairs like Euro USD, GBP USD. So the technical analysis today will be on Euro USD. Let's analyze Euro USD. So since we know that, okay, we're actually on can you see that on this Euro USD too, we are on the what, we're on the resistance, just like the DXY that we're on the support level. Can you understand? So it is like when you see a buy opportunity here, you should be looking for what, a sell opportunity on DXY. You understand what I'm talking about? So that is how you could actually make your analysis more romantic. You understand? So let's see what Euro USD is doing. We know that we're actually expecting same thing on Euro USD, since we've seen what DXY is actually doing. So just for the cruise, you could just analyze Euro USD from monthly perspective and see what it is. And just for cruise, we know that if we're actually selling DXY, we should be buying Euro USD because they are inversely proportional. You understand? So, but just for the cruise, let's see what Euro USD is actually doing. Or we talk about some other things. So, as usual, this time around, I'll be starting from weekly time frame. So now, when you look at it from the weekly perspective, we can see that Euro USD has actually been what, bearish for a long time, and it has broken the what, the string high, and the string high here. So now, which means that we are what, we are bullish. Can you see? So this is just like a pullback, and then we expect what, a new high which is above this high. So that means on the long term run, we are expecting a buy on what, on Euro USD. Why we'll be expecting what on DXY? We'll be expecting a sell on DXY. Understand? Based on this, so you can now mark out your key levels. This is a key level. Why is it a key level? It is acting as what? It is acting as, it is acting as support. Can you see that when market touched it, see what happened? It bounced up and formed a W, and then now going up. So let's go to the daily time frame and see what's up. Okay. So this is daily time frame. So when you look at this daily time frame very well, you can see that and these things, they are on a what? They are on a resistance. Can you see? So which means we expect them to do two things for us. Either they break this resistance like this and retest it, then continue going what bullish, or they do what, or they come back to this what, to this our support and continue going up. So that is what they actually do. So that is what I expect from Euro US. Either they break this or this. So, but what will actually make us to actually sell this thing is that it depends on the kind of candles they give us here. But when you look at these candles very well, you can see that we don't even have we don't have any bearish momentum yet on these candles from here, from this pullback here. You can see that they even broke this what, they broke this high. They broke this high with this pullback here, which means that we should be more, we should be expecting more of a bullish momentum from what, from Euro USD. Like we should expect a buy, but however we can't buy from here. So all we have to just do is just what, keep our fingers crossed, unless we want to scalp out of it. But based on swing trading or day trading, we just have to wait to see them break this high, then come down to give us a nice retest. You can actually pick up your Fibonacci extension at this level. Where's the Fibonacci to? You can pick your Fibonacci extension. Where is it? It should be here. Fibonacci extension. So you take it from here down to this. Or rather, you take it from here. You take it from here, from this low to this high, then back to that low. So that will give you your what, your next target. If you actually, if you had it been you taking your buy from here, had it been you taking your buy from this place, from this resistance now, that means you'll be looking for a take profit to this level. This level as your first take profit. Can you see it? Then your second take profit at this level. Can you understand? So that is actually how to go about it. We want to see Euro USD. We want to see Euro USD break this high, then give us what, a nice retest, because they did not go low here. They gave us an high low here. So we expect them to give us what, a new high, which will be above this. Can you understand? So the high should be above this, like this, something like this. Then we now buy at this level, and now buy to that Fibonacci extension level. You understand? So another case which could make us to sell is what, if they should pull back down here and then wait for them to give us a retest. So after giving us a retest, we can sell from this resistance now. Support that has turned into resistance because they've broken it. And this is our what? Our, what am I doing? This is our nearest support level, which this is our nearest support level which they could sell to. So from this place now, we can now sell to this place. I hope you can see the bias we have on Euro USD on daily time frame, because we are actually on a ranging market. So on a ranging market, it's somewhat not good to actually trade, because anything could happen. Market could go haywire. So you understand, we're on a ranging market, and it actually involves a lot of brain for you to be able to trade on that level. So you understand. So now this is 4 hour time frame. So when you look at this 4 hour time frame now, you can see here, can see that we have a what? We have a resistance here. Can you see the resistance now? Can you see the resistance that we have here? And this is the what? This is the nearest support on 4 hour time frame. So this is what we could just expect them to do before we place any trade on, based on 4 hour perspective. So our resistance now is very near on 4 hour time frame. So we can just wait them for them to just pull back into that zone, break it, then come back for a retest. Then we can now buy to the nearest what, to the nearest resistance, or wait for them to gradually pull into this our what, into this our support, then they can respect it a little bit, respect it. At the end of the day, they should break it. Then they will retest. So then from that retest, we can now sell to the nearest what? To the nearest support, which is this level. Our first take profit. Then our second take profit will be here, while the take profit will be here. So depending on your levels, you understand. So at it being, we've seen a nice signal and we want to sell, and just go to your short to take your. So above that candlestick or in whichever indicator that gives you a sell confluence, you understand. You can't just sell because they break it. You have to see the formation of those candlesticks that are being formed there before you consider taking a sell. So your stop loss will now be a little bit above that candle that gave you the final signal or final entry for you to actually sell that trade or buy that trade. You understand? So your take profit will be to the next support level. That's your first take profit. You understand? Your second take profit will be to the second point of support, then your take profit, and so on if you actually want to swing the trade. You understand? So that is how to actually go about these things. So let's go on 3 hours and see what 3 hours is actually doing. So on 3 hours, so um so on 3 hours, there's no much difference between the 4 hours and the 3 hours. There's not much difference. So if we just be waiting for what a buy opportunity on these things, honestly, because I can see the formation of what this is a formation of a swing high low. Then this leg now, this leg, we expect it to do what to form another high for us. This leg, we expect it to form another high for us. You understand? So then when looking at the momentum of the buy, look at how fast the buy was. Look at how fast and look compared to the sell. Compared to the sell. So now this one that you are seeing here, it is just a retracement. It has not this move has not been completed yet. If you look at it, because it has not broken this level. So now we have a retracement of this move at this level. So let's see. Let's take our Fibonacci. So you take your Fibonacci from that low to the high. Let's see how many percent they retraced. So they actually retraced 50% of it already. Can you see? They retraced 50% of it. Can you see? Exactly 50% of it. So now they are back. So we expect them to complete this leg. Do you understand? So by them completing this leg means we have to look for what? We have to look for a buy opportunity, and we expect dollar index to do what? Dollar index to go down. That is dollar to fall, dollar to sell. You understand? Because we are expecting buy on Euro USD. Remember I taught you something about correlation. Remember I said something about correlation. Euro USD, GBP USD, NZD USD are correlating somewhat. So if you want to know the percentage with which they are correlating, if you want to know the percentage with which they correlate, you can actually go to your daily FX, my FX book rather, to check the percentage with which those pairs actually correlate. I've done them in the previous classes, so you can just refer back to them. So now, when you look at this move as well, you can see if we should say that okay, the upward trend actually starts from here. Let me change the color so it won't look stuffy too much. So let's say the move start from here. This is the bullish move, and this is what the retracement move or the correction. We have the 50% already, meaning that we are waiting for another I if we even forgo this long buy. If we should forgo this long leg, do you understand? If we should forgo it, just look at this short move. We expect them to give us another high. So the way with which we're gonna buy this trade is what we expect them to what maybe after a little retracement of this move as well. Maybe they will retrace 50% of this move too, then break this and then continue going. So let's measure out 50% of this move. So you take it from that low to the high. So this is where the 50% falls. This is where the 50% falls. So let me remove the Fibonacci now. So now, which means that we expect what? We expect Euro USD to what? To get into this level, then break this place, then retest it, then continue going up. But another good news is that you can actually buy from here if you actually see the formation of nice candlesticks on this place. If you see those rejections on this place, which means you can actually buy from here. Your stop loss will just be a little pips below it, rather than you waiting for the break and retest of this of this resistance. Do you understand? So which means you can actually buy from that 50% if you should see nice formation of candlesticks, like maybe a bullish pin bar. Do you understand? Or a doji, a what's it called? What do they call this doji? Um, Flying dragon doji. Do you understand? Flying dragon doji. So let's go to 2 hours. So there's no much thing or much stuff on this equal. So you can see the same thing on 3 hours, 4 hours that we are expecting. Still the same thing. We expect this dude. I call Euro USD dude. Expect this dude to actually pull back into that 50%, then continue buying. Okay, you understand? I don't expect it to go below this. However, if they should go below this level, can you see that it is a resistance that has also been tested twice? So if they should go to this level, that means if they should go beyond that level, that means those guys, that means so that means these guys actually want to sell. They are not ready to buy, so we can actually wait for them to retest and we sell to the nearest resistance. Sure, you know that if they should get to this place, they've not broken structure yet. So that is the reason why you need to take some of your profit at this level, which is your nearest support. Sure, you understand? They can continue the leg. Remember, I showed you the long leg on what? On 4 or 3 hours. I think 3 hours. I showed you the long leg. See, this is the long leg. This is it. So this is actually the leg on higher time frame. So if they've not broken this leg, we can't say there's shift in structure yet. Do you understand? This is just the small moves by scalpers and day traders. Do you understand? And tó ní market gan tí wo bẹ̀, those people that owns the market are still looking at this thing like, okay, let's see what this thing is actually doing. Let's see. Do you understand? So now this thing is kind of forming something like head and shoulder on 1 hour. Who else is seeing what I'm seeing? Let me remove all these things. Who else is seeing what I'm seeing? Damn shit. Looking like formation of head and shoulder. But then I won't consider it as head and shoulder because it has not broken this what? The low here. Don't get. So they can pull back to form a new high with this formation now because it did not break this. So I might not be interested actually. Do you understand? So is this is it. If they actually want to form head and shoulder, let me remove this. So if they actually want to form head and shoulder, you should actually go back from here. Do you understand? Should actually go back then to the nearest what? To the nearest support, which is this. Can you see? Can you see them? So, and either ways, if you are going to sell from this right shoulder too, you have to wait for rejections and formation of candlesticks. So if you see rejections, so your stop loss can actually be above the rejection. This is what? This is the left shoulder, this is the right shoulder, and this is what? The head, and this is the neckline. This is the neckline. I always love them to actually form something like this if they want to form head and shoulder. Then break this and break the hand here. I always love them to always break the hand here like this, then now go back to form the what? The right shoulder, then continue going down. That is what I always love. But this place now, because I don't really like them making equal what? Making equal lows with this like this because it does not guarantee making equal lows, making sure that the neckline is making equal lows like that. I don't really like it. I always love them to form something like this to actually break it a little bit and then push up. But here they did not break it. They only tapped into that resistance and so into that support and then pull back up and then peradventure they can decide to form it and now come down. Remember that we are expecting 50% retracement on think 2 hours or I think 3 hours, 50% retracement of this move here, like this, from here to here on 3 hours. I think we are expecting the 50%. So now the 50% falls here, right? So meaning that if you are actually going to be taking this head and shoulder, it will even be advisable for you to take half of your profits. Oh God, let me delete everything. No, 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 no. Let me use another color for this. So meaning that if you are going to be taking this head and shoulder, right? If you are going to be taking the head and shoulder, half of your take profits, you should take it off here because this is a 50% retracement of the move that we are expecting them to actually buy from if they are going to buy. So you understand? So when they now got here and see those formation of those candlesticks, we can now decide to buy again. So you understand? So that is just my bias on Euro USD. And this is where they will form the what? The right shoulder. Then the 50% is somewhere around there, I think. So take our profit. Peradventure, if they are not going to buy from that 50%, since it is that profit that you took away and you locked the rest, you still be in the trade. You understand? Then wait for them to retest and then continue selling down to this place. So now if they now break this place and can I say okay, these guys are going bearish because this is a swing low on uh higher time frames. Do you understand? So that is how you are going to see it. You go to 15 minutes, 5 minutes. I go as low as 5 minutes to pick up trades sometimes, you understand. So that is how to go about those trades. So another thing I want to talk about is another thing I want to talk about is another thing I want to talk about is what's it called? Uh, I only told you guys about DXY indices. Like I only told you guys about what's it called? I only told you guys about dollar indices. There are indices for other pairs too, not only dollars. There are indices for other pairs too, not only dollar. You understand? But those ones, anyways, you get as them be, you get as them be. So let's go. So I'm not going to go in depth, really in depth into those indexes compared to the way I went on DXY. I'll just tell them what they are. So for euro now, the index for euro is what EXY I think. So let me show you guys. EXY is the index or indices. EXY is the indices for EXY for euro. So for GBP, which is the Great Britain pound, the indices for so so this is the reason why I really do not like it. Can you see the gap here? They have a lot of gap compared to this the XY. So for what's it called? For Great Britain pound index or indices, can you see the gap? Can you see the gap? Gap, gap, gap. Can you see the gap? So that is why I really do not like analyzing this thing. Can you see the gap? See the gap? See the gap, man? See the gap, man? See the gap, man? So these things actually determines the index of euro as well. Determine the index of euro as well, but then get as in. So for Great Britain pound, the index for Great Britain pound is BXY. BXY, BXY. That's can you see British pound currency index. British pound currency index. So I was able to capture the price here and then I went away. So um that of Australian dollar is what AXY. So this will actually be the last class on technical analysis anyways. So the next class, I hope God gives me the strength. I'll be talking about risk management and trading psychology. All you need to know about trading. And CXY is for Swiss franc. Okay, for Canadian. It's for Canadian dollar index. Canadian dollar index. GSY is for Japan yen index, SXY is for Swiss franc index, so and so on and so forth. You can subscribe and like the video if you want. So I'll be ending the session here. I'm tired already. Like, I'm tired. So take care, guys.